Apple's Tim Cook, as Susan just noted, heavily involved in President Trump's fair trade fight with China. President pushing back on China to stop trade theft and do fair trade. China doubling down. Experts saying overall U.S. growth will not be hurt by this trade fight. Trump will make deals. Plus, the dollar amount of the tariffs small versus the size of the $80 trillion global economy. That's perspective there. U.S. trade delegation will travel to China this week to talk about fair trade. Apple, though, look at this, facing a double whammy. Yes, revenues there up 20% year over year. China, though, is not only one of Apple's biggest markets for the iPhone and its devices, but the tech giant's component production for its devices are made in factories in China. They are in the bullseye of tariffs in two ways. Let's take it to Jonathan Hoenig and Michael Lee. What do you think of that, Jonathan?
Yeah, well, this company has succeeded because of trade with China, Liz. That's why it is the largest stock in the United States. And I tell you, any tariffs, I don't care how small the president or the administration say they are, has a direct impact on Apple and its massive global supply chain. I mean, again, we manufacture the ideas. Apple manufactures the ideas in California. They assemble in China, and it's all a series of win-win-win situations. The stock's up after hours. If we start talking trade war, this is a company that could go significantly lower as a result.
Yeah, and then Trump can use Apple's muscle with China to say, you know what, knock it off and give us some fair trade deals, Michael.
You know what? There's no such thing as a trade war with the United States. You either agitate us and you back down, or we crush you, right? The trade imbalance we have with China is it's so large. I mean, it's all talk and it's all posturing. I believe that what's going on with North Korea is a direct, it's an olive branch from the Chinese to the world and to the Trump administration to back off. China needs us way more than we need them. They need Apple. Apple needs them. It's a vicious cycle that goes around, and we're looking for better terms because we deserve them.
But you know what, Jonathan, hang on 1 second. He does. Michael makes a great point about Trump using our economic muscle to get China to get North Korea to knuckle down. Go ahead.
Well, I mean, tariffs are taxes against Americans. They're not taxes against Chinese. And if you listen to what the president says, or even what Wilbur Ross has said in recent days, they're ready to go forward. They're asking American companies to, in their words, accept a little pain over the course of a trade war, of a trade conflict. So they understand this could be, at least in the short term, detrimental to the U.S. economy, because they think that trade, even as Michael mentioned, is win-lose. Trade is win-win. China has benefited. Americans have benefited. Yeah. God knows investors have benefited. And this is a real risk.
We've got news. We've got news coming in. China's foreign minister is traveling to North Korea tomorrow. It's the first visit since 2007, again, ahead of the president's talks with North Korea. The president today saying a decision about the timing of that could happen within days. There's news on that. Let's listen to what the president said.
We want to get peace. That was a big problem, and I think it's going to work out well. We'll see. We're setting up meetings right now, and I think it's probably going to be announced over the next couple of days, location and date.
Michael, what are your expectations of what's going to happen here?
Look, I think the harder the Trump administration presses these people, the better it is going to be for the U.S. in the long run. There may be some short-term pain, and Jonathan is absolutely right. Tariffs benefit no one, but the fact of the matter is the U.S. is the freest and fairest trader in the world, and until these other countries open up markets to us, we have to be willing to hit them with some of their own medicine. So, you know, if we do have some short-term pain, it will be for long-term gain. We need freer and fairer traders.
You know, let's turn to Senator Marco Rubio now trying to talk down the tax cuts, but they're working. Wage growth is up, consumer confidence at generational highs. Atlanta Fed now says 4% growth for the next quarter, Jonathan. Companies are swimming in cash. The billions they got from the corporate tax rate, we're talking Google's parent, Alphabet, Bank of America, Whirlpool. These companies are reinvesting back in America. So what's the complaints about?
Well, I mean, I think, you know, tax cuts are very important. Tax cuts are a big part of it. And I think you've seen EMAC over the course of many, many months now, a number of companies returning cash to shareholders. So, of course, that's integral. But, you know, as we've talked about in the past, you know, another a tax cut isn't so material if you get slapped with a 10, 15, 20% tariff. I mean, that's just another sort of tax. So it's almost disingenuous to say we're cutting taxes at the same time we're threatening tariffs.
Michael,
it's the same thing and even more
got it. Michael, final word.
Bottom line.
Final word, Michael.
Look, Liz, you either believe capital grows quicker in the private sector than the government sector, or you don't. And if you believe it grows quicker in the private sector, as all of history shows you, then these tax cuts are not a good thing. They're a great thing.